Hi, I'm Dongxiang. Welcome to Dig Into China, where we explore China in depth to reveal unique perspectives. Xi Jinping must be in a good mood these days. Right after Spring Festival, both A shares and Hong Kong stocks surged. But why did this rally happen? The main driver was DeepSeek, which triggered a wave of AI hype. But let's be clear. Events like this are extremely rare. Why? Because DeepSeek's success was possible only because its founding team had plenty of money. Liang Wenfeng made his fortune running a quantitative fund before moving into AI. If he had needed venture capital, most of the funding would have come from state-owned investors. That would have required him to sign an unlimited joint liability agreement, a near guarantee of failure, bankruptcy, and a financial ruin. That's the brutal reality for startups in China. Now, ask yourself, how many people in China can start a business without financial constraints, especially in a capital-heavy industry like AI? That's why DeepSeek's success is an outlier. It cannot be replicated. So don't be fooled by the temporary surge in Hong Kong and A shares. Stay clear-headed. But amid the AI stock rally, something strange happened. On February 11th, right before the market closed, real estate stocks suddenly soared. Vanke even hit the daily limit up. What was going on? Bloomberg broke a major story revealing that the Chinese government was preparing a massive bailout for Vanke, pledging to fill a 50 billion yuan funding gap this year. As part of the plan, local governments will use 20 billion yuan in special purpose bonds to buy Vanke's unsold properties and vacant land. The rest of the money will come from bank loans and newly issued bonds by Vanke. On top of that, just one day earlier, Vanke's major shareholder Shenzhen Metro had lent the company 2.8 billion yuan to help repay debts. These moves immediately sent Vanke's stock price soaring, pulling up other real estate stocks along with it. So, what's next for China's real estate industry? The Vanke bailout marks a turning point. The industry isn't disappearing, but it's entering a new era. Some people assume that since China's real estate market is in crisis, all developers will collapse, go bankrupt, and no one will build or sell homes again. That's simply not true. The industry will continue, but the business model will change. When Vanke faced its financial crisis, there was intense debate within the Communist Party about whether to save it, how to support the real estate sector, and what direction the industry should take. Government officials, financial institutions, local governments, and academic experts all weighed in. State-owned banks were strongly in favor of bailout. Their reasoning was simple. Vanke is entangled with 87 major financial institutions. If it collapses, it could trigger trillions in bad debt, dragging down the financial system. Their internal risk assessments made it clear the financial sector couldn't handle that kind of shock. Shenzhen's municipal government also supported a rescue, citing two official reasons. First, Shenzhen plans to build over 100,000 affordable housing units. Private developers won't take on these projects because they barely make a 5% profit, essentially a death sentence for them. Only state-owned enterprises can handle this. Vanke, though only half state-owned, is the largest and the most reputable developer in Shenzhen. Converting it into a fully state-owned company ensures these projects move forward without profit pressure. Second, Shenzhen wants Vanke to remain an industry benchmark. The real estate sector needs a way forward, and upgrading the industry is part of the plan. Shenzhen Metro sees Vanke's factory renovation projects as a test case for industrial upgrades, something that could be replicated nationwide. If you live in a major city in China, you've probably seen old factory buildings transformed into tech hubs or commercial centers. Vanke has done this in Shanghai and Beijing, and Shenzhen's government believes this model aligns with Beijing's push for urban renewal. But those are just the official reasons. The real motivation? Shenzhen's government needs real estate developers to keep working with them to sustain land-based fiscal revenues and keep money flowing from the financial system. Just look at the land sales this year. At the end of last year, Xi Jinping helped the local governments restructure their debts. Now land auctions are booming. State-owned developers are snatching up land at high prices across the country. The top three buyers: China Merchants Shekou, China Resource Land, and China Overseas Property, all state-owned enterprises. Do they actually believe the real estate market is about to recover? Of course not. This is just a way to funnel money back to local governments. Remember Xi Jinping's real estate innovation from last year? Developers buy land at high prices, allowing the government to issue special purpose bonds, which it then used to buy back the land. Then developers buy more land, and the government issues more bonds. Money keeps flowing from the financial system straight into government coffers. So naturally, Shenzhen's government is determined to save Vanke, because in the end, the money for the bailout isn't coming from the government, it's coming from the financial system. Are there any voices against the government rescuing Vanke? Of course, there are. So, who oppose it? Most of the opposition comes from academics and some government-affiliated experts, such as those from Tsinghua University's Real Estate Research Institute. Their main argument is simple: unfairness. Why should a state-owned capital use public resources to bail out a single company? If the government rescues Vanke, then it should rescue other real estate companies too. Otherwise, it's unfair. Some moderate experts suggest a temporary bailout. They believe state-owned capital should step in during the crisis but exit once the real estate market stabilizes. In the end, it seems Xi Jinping made the final decision. He fully accepted the stance of the Shenzhen government and the financial sector, ensuring Vanke's survival. Soon after, Shenzhen Metro publicly announced that its stake in Vanke would only increase, not decrease, reassuring the market. From that moment on, Vanke officially became a state-owned real estate company, and the rules of China's real estate game were completely rewritten. Starting in 2025, the state-owned enterprises will monopolize real estate development, while private companies will be forced to transition to supporting roles such as construction services, property management, and home renovation. Why is the government pushing private developers out of the industry? The key reason is that China's land financing model has changed. Private companies driven by profit can no longer adapt to the new rules and will inevitably be eliminated. Last year, Xi Jinping introduced a new land financing strategy. Real estate companies buy land at high prices. Then local governments issue bonds to buy the land back. Developers then purchase land again at high prices, creating a cycle where financial institutions indirectly fund the government. That was the first major change in land financing. The second change is that state-owned developers will no longer prioritize profit. Instead, they will focus on government-mandated social goals. When local governments auction land, they will require developers to include a certain percentage of affordable housing, squeezing profits to as low as 5%. Only state-owned enterprises can survive under these conditions. In the future, only about 20% of newly built housing will be for sale on the open market. The remaining 80% will be allocated for affordable housing, talent housing, and welfare housing. Private developers will be completely excluded from real estate development and forced into secondary markets like property management and renovation, where there may still be some room for profit. So, what options do surviving private real estate companies have? The first option is to transform themselves into state-owned enterprises like Vanke. But realistically, this path is nearly impossible for anyone except Vanke. Many small and mid-sized private developers are scrambling to transfer their controlling stakes to local government-owned investment companies, hoping to get the state-owned label. Even large private developers are giving away up to 30% of their projects as affordable housing to win state capital investments. Everyone knows that without a state backing, their only fate is a complete exit from real estate development, selling off assets at the rock bottom prices before facing bankruptcy and liquidation. The second option is to shift to real estate-related services such as renovations, property management, and contract construction for government housing projects. In the past, private developers bought land from the government. Now, they rely on government contracts to build public housing. However, for once mighty private real estate giants, the profits in these secondary markets are nowhere near what they used to make from property development. In short, China's real estate industry is now fully under state control. Land development is monopolized by state-owned enterprises, tightening the bond between state-owned enterprises, financial institutions, and the government. This shift aligns with Xi Jinping's vision for urban renewal. In the future, 80% of housing will be affordable or government subsidized, while only 20% will be sold on the open market. Home ownership will become less common, and renting will be the norm, somewhat similar to Singapore's model. Old city districts and abandoned factory zones will be entirely redeveloped by state-owned enterprises. These projects will generate GDP growth while serving political goals. Since state-owned enterprises don't need to chase profits, urban renewal could mean anything from turning old buildings into startup hubs, parks, stadiums, or shopping centers. China's office buildings are already suffering from high vacancy rates, which doesn't support the government's bright future economic narrative. So these empty offices might soon be repurposed, converted into research centers, AI exhibition halls, or even rental apartments. With endless projects like these, the government will always have something to do. Essentially, if Xi Jinping thinks something looks bad, it will get redeveloped, entirely managed by state-owned enterprises, with no need to consider profitability. It's a bit emotional to think about Vanke used to be the gold standard in China's real estate industry. If you had experience at Vanke, every major developer wanted to hire you. It represented the most advanced practice in the industry. But in the future, what will Vanke's executives be discussing in meetings? Instead of business strategy or profitability, they will be talking about how many affordable housing units they've completed, the percentage of talent housing they've allocated, whether their cooperation score with the government is high enough, and how well they've met party building requirements. They'll even need to make sure the right person is assigned to pour tea when government officials come for an inspection. From now on, Vanke's management salaries will be tied to these political targets. No one will be thinking about how to make the company profitable or how to run it efficiently. And yet, among all real estate firms, Vanke still has the best fate. Isn't that just a little bit bittersweet? Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.